I told you there's a chance you could save $1,000 or more on your student loans with one phone call. For many individual borrowers out there on the income-based repayment plan known as IBR, that's a fantastic possibility. So the revised pay-as-you-earn or Repay is an income-driven repayment plan that caps federal student loan payments at 10% of your discretionary income and forgives your remaining balance after 20 or 25 years of repayment. Now, the primary people who should consider using a different program besides some of the other income-based repayment programs are those with debt-income ratios above 2, meaning you owe double what you're making. Now, if you're wondering why does it matter how much you owe relative to your income, the answer is that you probably have the option to switch to the newer revised pay-as-you-earn program, also known as Repay. So in this video, I'm going to be providing some additional information about this program and why you should consider applying for it if you qualify. By the way, if you find value in the content, do me a favor and tap that like button. It really helps to support and grow the channel. Alright, Joe, so Repay is one of several U.S. Department of Education's income-driven repayment plans that can help make loan repayments more manageable than the 10-year standard repayment plan for most loans. Repay is a relatively new program that was introduced in 2015 as a revision to the Education Department's Pay-as-you-earn or Pay plan, an income-driven repayment plan that generally limits your payments to 10% of your discretionary income. So Repay opened eligibility to millions more borrowers because unlike Pay, it's open to borrowers who took out federal student loans before October 1st of 2011. Now, Repay came at a time when student loan debt was continuing to rise. Right now, there are more than 45 million Americans that have more than $1.6 trillion in student loan debt, and these student loan debt numbers are getting worse every single year. So you may be wondering, is Repay right for you? And I have to say, among income-driven repayment options, it offers the best combination of availability to borrowers and low monthly payments. You may want to choose this program in the following instances: if you're single, if you don't have graduate school debt, or you expect a much higher future income, and also if you don't qualify for any other income repayment plan. Now, one of the biggest benefits of the Repay program instead of the other income-based program is that there are no prepayment penalties on federal student loans. That means if you know you're going to make a lot more money in the future and will have to pay it all back, then you could pay extra to accumulate less interest. If you have the choice to be on a plan that requires payments of $1,000 a month or one that requires payments of $2,000 a month, which one would you choose if you were allowed to pay extra? This is one of the benefits of the Repay program. Now, another added benefit of the Repay program is that it's open to anyone with direct federal loans. That means if you had loans all the way back in 1994, well, guess what? You're still good as long as they're under the direct program now. Now, from doing my due diligence, from what I see, one of the biggest differences with revised pay-as-you-earn is its interest subsidy. Because income-driven payments are often so low, it can be as small as $0. They may only chip away at accruing interest on your loans. Interest accumulates fast that way. So most income-driven plans subsidize the difference between your payments and the accruing interest at certain points in repayment. And Repay has a more generous subsidy than other income-driven plans, paying the entire difference on subsidized loans and half the difference on unsubsidized loans for the first 3 years. After that, it covers half the difference on both loan types. Each month on the first, second, or third business day, the government will forgive half of the interest that you deferred from the previous month. Here's an example. So let's say you're charged $1,000 per month in interest. If you require monthly payment on Repay, it's $300, and then you defer $700 in the current month, $1,000 minus $300. On the first, second, or third business day of the following month, the government will subsidize $350 of the interest. So 700 divided by 2 equals $350. So your balance only grows by $350. Those that want to pay off their student loans fast and want to do so in the most efficient way possible benefit the most from the Repay interest subsidy. Using Repay in the short run would decrease your monthly payment. You can also benefit from the Repay interest subsidy if you don't expect to work full-time for 25 years. The reason being is you wouldn't have to make those extra 60 payments in years 20 to 25 of the loan because you wouldn't be working. Now, just make sure that you check with your loan servicer and you are getting the interest subsidy. Very important. You want to make sure that you're getting that interest subsidy. Another great benefit is that Repay is a student loan repayment plan that is eligible for public service loan forgiveness, also known as PSLF. If your loan is forgiven under this program, the loan forgiveness is currently considered tax-free, which is a huge positive. Repay payments count towards the 120 payments that are required to qualify for PSLF. After that, your loans are erased. So if you work in the public or nonprofit sectors and are currently under another type of repayment plan, like a 10-year standard repayment plan, consider switching to an income income-based repayment plan like Repaye immediately. The reason? Well, you'll reach the required 120 payments at the end of the standard Repaye payment plan 10-year payment period, and there will be no balance left for forgiveness. Public service loan forgiveness covers a variety of employers, including AmeriCorps, the Peace Corps, and nonprofits involved in public interest law, health, and disability services. So you may be wondering, well, how do you apply for Repaye? Must enroll in the pay as you earn. You can do this by mailing a completed income-driven repayment request to your student loan servicer. It's easier to complete the process online. You can change your student loan repayment plan at any time. So visit studentaid.gov, log in with your federal student aid ID, or create a FSA ID if you don't have one. Once that's done, you select income-driven repayment plan request, choose your plan, and complete the application. I really hope you found value in this video, and it really helps to get you on the road to paying down your student debt much faster. If you found value in the video, do me a favor and tap that like button and share it with others. It really helps to support and grow the channel. Don't forget to subscribe and turn on the notification bell as I'm posting valuable new content multiple times a week. Thanks again for watching, and until next time.